Hi, are you new to the stock market? Are you just beginning to find your way in the challenging world of trading? In this video, I will discuss how you can build a trading system that will help you become a profitable trader. This system has three important elements, namely method, risk management, and psychology. These elements need to work in harmony with each other to produce the desired level of profitability, just like the gears in a machine. I am Ronnie Ordoña and I teach trading in the stock market. Watch the rest of this video to see how you can benefit from this trading system. Method is the most obvious element of a trading system. And this method we can break down into five sub-elements. First is knowing how to pick winning stocks. You need to have your own criteria of a good stock. You don't buy outright what your friends or some analysts tell you to buy. What is beautiful to them may not be beautiful for you. If the recommended stocks do not fit your own criteria, reject it. The stock they recommended may not fit your personality or your trading objectives. For example, the stock may be too volatile, and if you cannot take the wild fluctuation in price, this won't be good for you. You could be forced to sell at a loss. So, what criteria could you use? The criteria could be those that tell if a stock is profitable or making profit consistently, stable or unlikely to go bankrupt, gives high dividend, has huge assets, etc. And the place to go to get this information is the financial statements like balance sheet, income statement, and cash flow statement. From these accounting records, you can get metrics like earnings per share. It tells you how much the stock earned in the past, say 12 months, or if you want even longer, several years before. Buying this way means that the trader thinks the profitability of the stock will continue. Others use PE ratio or price earnings ratio. This is the metrics that tells us if the stock is cheap or expensive. And there are many other metrics that you can use. So just do some research. Many think that after knowing how to pick winning stocks, that's it, and they are ready to trade. This is not so, for there are other steps you need to take. So the next step is to know how many shares you need to buy. There is a mathematical way to determine the number of shares to buy. This will minimize your risk, but we will take this up in later lessons. So for now, I'll say that you don't buy all your money can afford. This may be too much and therefore will expose you to greater risk of losing money. For beginners, I suggest a minimal amount just so you can test the water. Then as you gain competence and confidence, you can gradually increase this amount. The third is knowing when to buy. Timing is very important in trading. You don't want to buy a stock that is falling, di ba? Like this stock all day of Manny Villar. In November 2021, during its initial public offering, this was selling as high as 1 peso and 10 centavos per share. Then, from there, it was a continuous downtrend. And as of August 3, 2022, that's 10 months later, it was priced at 30 centavos, a drop of 73%. So, when do you buy? Buy when you are convinced that the stock is on its way up, when the uptrend is already beginning to form. You don't want to buy also when the stock has risen a big amount, say 50% from its last low level. This stock could already have exhausted the demand and could be headed in the opposite direction already because the buyers will be taking profit already. If you are late for the party, never mind. Wait and watch for another one. There will surely be another opportunities. So just be patient. The fourth element of method is knowing when to sell to take a profit. Now, this is beautiful. At some point in time, after buying the stock, you will sell to collect your profit. So when do you do that? Some traders set target profit, say at 5, 10, or 20%. When this amount is reached, they sell. Doing it this way assures them of profit. The problem with this is you could be selling when the stock is still on the rise. And after selling, say at 20%, the price goes to 25, 30, or even higher. Then you will be leaving money on the table. So most traders sell when the stock is beginning to show signs of reversing, not at a target percentage. Selling this way tells the trader that the uptrend is over and the profit could be taken to maximize it. So you let your profit run to as high as it can reach, selling only when the price has begun to reverse. The fifth and last element is knowing when to sell to cut a loss. Not all prices will go up after you buy. Sometimes they will instead go down. In other words, you will be wrong in buying some of the times. And that is perfectly okay. Traders make mistakes. Mistakes of buying too soon, too late, or even buying the wrong stock. So what do you do when you are wrong? You get out of the trade. You sell. This way, your loss will not grow big. Some sell at 7% loss, others higher at 10% loss because they want to give the stock time to reverse and go up. If this doesn't happen, they sell. Don't worry over that loss because you will recover that when you make a profit in some other stocks. Remember, in the fourth element, we said let your profit run. And in this last method, you cut your losses. Again, this is very important. Always let your profit run and always cut your losses small. If you follow this, your profit will always be bigger than your losses, giving you a net profit. Now, a better way to cut your loss is to use some indicators, like the presence of a nearby resistance. This is a price range over which traders tend to stop selling and begin to buy. Now, traders wait for the price to touch this resistance. If it bounces back, they don't sell because the fall has been stopped. But when the price penetrates this resistance, they sell because it could go even lower. Others still use ATR or average true range or even standard deviations. These are tools in statistics that can be useful to you. This was exactly the case of Dito, the third Philippine telco. In August 2021, just last year, it was priced at 9 pesos and 15 centavos a share. Then it began to fall. And by January 2022, this year, it was selling for 4 pesos and 90 centavos, already a good bargain. And then it started to go up, giving a sign of a new uptrend. But when it reached 7 pesos in February, a month after, it fell again. And by August 2022, it was just 3 pesos and 77. If a trader bought this here between 5 to 7 pesos, he would be hopeful it will continue going up to maybe 9. But being hopeful can be dangerous because it could make you complacent and then you fail to see the signs of reversal. And it did happen to Dito. From 7, it fell all the way to 3.77. If a trader fails to sell on time, it will be really painful, like catching a falling knife. So that's it for now, friends. We have discussed the details of the first element of this trading system, the method. This will give you the much sought edge in trading. Remember, we said in an earlier video that you don't trade without an edge. Don't gamble your money away in the stock market. Trade with an edge. Be like the casino who has the edge, not the gambler who loses money. Now, the profit you made using the method will easily fly away from you if you don't exercise the next two elements of a trading system, the risk management and psychology. We will discuss these two in the next video. If you want to learn more about making money in the stock market, I invite you to attend my free one-on-one webinar. PM mo lang ako para sa schedule. Okay, so that's it. Thanks for watching. If you think you learned from this video, please like it and leave some comments. If you think other people, your friends and relatives may benefit from this video, please share it. Okay, bye-bye and see you soon.